Hey there, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. You are tuned into Next Level Charting. Thank you very much for joining us. I appreciate it. If you're watching this video on YouTube, and you like it, of course, please give us a thumbs up and consider subscribing. So today we're going to cover over a dozen tech-related ETFs. We're going to do long-term charts, weekly charts, going back 3 years, but the previous years don't matter. It's the last year or so that matters. And we're seeing big breakouts on these weekly charts across the board. And then I'll give you a preview of the summer reading list, which is available at TrendInvestorPro.com. So I'm going to be working off the ETF Master ChartList, which is available to subscribers of TrendInvestorPro.com. And it has, you can see, 253 ETFs, and they are organized in a top-down manner with your major index ETFs at the top. We got value and growth separated at the top there. Then we've got the sectors, and then we go into industry groups. And the first industry group is technology. There you can see 3010 is the numerical prefix, TE. And I'm going to go over these ETFs because we are seeing breakouts pretty much across the board. So when we look at these charts, there's two things you need to look for. First of all, where are current prices relative to the prior highs? So you can see here for the FIVG ETF, we broke out to new highs and we're very close to the highs from that ascending triangle trend line. So that's a leader. And the second thing is there was a dip here in May, and did prices form a lower low, and did we have a falling wedge take shape, or did we have a triangle take shape, or in this case we have an ascending triangle and we're almost getting a breakout. So ETFs that formed a falling wedge are a little bit weaker. They're not as strong as ETFs that form like a flat triangle or consolidation and are already breaking out here. So if we look at the next one, we can see it's the cloud computing ETF, and it has that lower low that I was talking about there. So there you can see, whereas the FIVG ETF has this like higher low working there, this ETF here has a lower low. But in any case, it's still a corrective pattern because you had this massive advance, and now you have this correction back to the rising 40-week moving average, which is equivalent to the 200-day, and we're getting a breakout. So this is typical for a corrective pattern, and now we're getting a breakout that signals a continuation of this prior advance. And the theory behind this is just a massive advance, 13 to 30 basically. So after a massive advance, you're entitled to a big correction. And that's what these tech ETFs did. So here's cloud computing. And the next one we're going to do is cloud computing SKYY. And you can see it's got a similar pattern. It's a triangle more than a wedge because it barely held above that prior low. It did hold the 40-week. So if you held the 40-week, you held up better. If you broke the 40-week, you showed relative weakness on the way down. But Sky has a consolidation within an uptrend, which is a rest within that uptrend or a bullish continuation pattern. And there you can see getting the breakout. Then if we look at Hack, cybersecurity ETF, we can see a triangle as well and a breakout. And also notice that you had this big advance, and then this decline retraced about 50 to 61.8%. So this is like 2 steps forward and 1 step backward. And as long as you can maintain that sequence, you're making progress to the upside and in an uptrend. Now, I will say that a lot of these ETFs are short-term extended because you've had a pretty good advance the last 6 weeks or so. So maybe we get a throwback to the breakout zone that would give a second chance to partake in these longer term breakouts. So we move on to the next page here. This is Cyber, which is the other cybersecurity ETF that I follow. And you can see that it is stronger than Hack because it's at a 52-week high already. It is broken out of the triangle and is hitting a 52-week high. And this was featured in Chart Watchers a few weeks ago because what I try to do is play the swing within the pattern. So you have a downswing, you have an upswing, you have a downswing. And when you got this downswing, if you want to anticipate a breakout, you focus on this move here on a daily chart and look for a breakout. And we got a breakout there that week with the move above the 10-week moving average, and that led to the bigger breakout of the triangle. But again, breakouts across the board. Here is the FinTech ETF. Now here you can see the falling wedge. We've got a lower low, and we got a break below the 40-week. So it did not hold up as good, but it's still a corrective pattern because it's a falling wedge after a big advance and after a new high. And this breakout signals that the correction has ended and the bigger trend is resuming. Then we look at the Internet of Things ETF, SNSR, and big move and not really a correction, just kind of some chop around here in September, October, another big move, and then a consolidation, a high triangle type consolidation. This is a bullish continuation pattern, and it argues for a breakout and a continuation higher. Then we look at Robo, which is the Global Robotics and Automation ETF. It's got the falling wedge working. Now this is clearly one of the weaker breakouts. You've pretty much been flat for 4 weeks. So that one, I would kind of move aside and say, nah, I'm not interested in that one. There are other ones that look stronger. Here is the social media ETF. It's getting a big move today, but it's not as strong, but it has a falling wedge and a falling wedge breakout. And then if we look at the First Trust Internet ETF, there's a triangle holding that rising 40-week moving average and breaking out of that triangle to signal a continuation higher. This is not just parts of technology. This is all throughout technology. Now we look at iPay, and it's a little bit weaker because it started to bounce off this support zone, but kind of stalled the last 4 weeks. But it's got a bounce. It's a consolidation within an uptrend. It's very close to a new high. You know, when you're close to a new high and you're above the 40-week moving average, you're in an uptrend, and that's the path of least resistance. Then we look at networking IGN. There's a triangle, and then Cisco's been leading the market over the last couple of months. And there's a breakout in IGN and a 52-week high. So what happens is this breakout zone turns into a support zone. So if you get a throwback, which we may have already had last week, but say you move back into that 69 area, that might provide an opportunity to partake in this bigger uptrend. Basically, all I do is look for pullbacks within bigger uptrends. Here's another robotics ETF, BOTS, and it's got a triangle, but you can see the breakout isn't that strong. So there are other ones that look stronger. Now we get to the 3 semiconductor ETFs. This is SOX, and it has what looks like some sort of a triangle, maybe an ascending triangle because you got that higher low working there slightly, but you got a 2-week bounce, 4-week stall. So it hasn't been partaking in the last 4 weeks, but watch out. If you get a breakout here, that opens the door to new highs in the SOX. If we look at XSD, now XSD is more of an equal weight ETF. SOX is weighted by the large cap stocks that are semiconductors, but XSD treats everything equally. And there you can see a pullback, and you are almost on the verge of a breakout, but you know, this one's lagging. You know, SOX is up near a new high, and this one's still battling its trend line and hasn't broken out yet. So if you had to make a choice, you would pick SOX or even SMH over XSD. And there's SMH. It looks like SOX. It's a consolidation. You got this 4-week consolidation after that 2-week surge. So watch out. If you get a breakout there, that is going to be bullish for SMH. And then we look at IGV. It's one of the leaders there. A triangle, testing the rising 40-week moving average and breaking out of that triangle and very close to a new high. We got Adobe and Microsoft leading in the software group. And then we look at XSW, which is the equal weight software ETF, and it's got a triangle and a triangle breakout working. So again, triangle breakouts, falling wedge breakouts across the board for technology. You've got a number of ones that are challenging resistance levels like SOX and SMH, so watch for breakouts there. So the summer reading list is available to everybody. You don't have to be a subscriber to Trend Investor Pro. It's a free article. If you go to the website, trendinvestorpro.com, and you click on the analysis page, you'll see all the articles that are available. And there is the article, A Dozen Books That Influenced My Analysis Process, Understanding of the Markets, and Trading Mindset. And so I've got links to all these books on Amazon if you're interested in them, and they go into different areas of analysis and trading mindset. So a little something there for everybody. And also on trendinvestorpro.com, I did an introduction to trend following indicators complete with a video. And I put 10 trend following indicators to the test. And I also created a big video on that to describe the process and everything that was going on. There you can see everything that is talked about. So here are the 10 indicators that I test. And I test the trend composite. And I tested it on a basket of ETFs going back to 2007. And that is available to subscribers. So if you'd like to know more about trendinvestorpro.com, you can click on the link below in the description. Again, if you like this video, please give us a thumbs up and consider subscribing to StockCharts. Thanks again for tuning in. Have a great day, and I'll talk to you again next week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.